basically how I think about Galaxy is like the three biggest trends over the next decade that I think are like investable is like, AI, crypto, and then robotics. I don't know if you've seen some of this, like what some of these humanoid robotics companies can do,
Shocking.
but I think that's going to be really massive. And I think Galaxy sits like pretty squarely at the epicenter of like AI and crypto. And, on the AI side, instead of like investing in, OpenAI at 500 billion or like Anthropic or one of these companies and they're leapfrogging each other, you don't know who has the best model, all this stuff. You can kind of buy like the picks and shovels to the gold rush, and you guys are just sitting back and collecting rent. So I love it from that angle. And then in terms of crypto, over the past 8 years, you guys have built really awesome reputation. You seem to be the go-to people in, maybe in the world or at least for sure North America if anyone wants to do something in crypto. So I really, appreciate the stock from that point of view. And previously I was holding like all these altcoins, which have gotten a lot harder. Since 2021, you could throw a dart at the board and everything would go up. Since then, the market's matured and it's gotten a lot more difficult. But kind of during the tariff tantrum, I, moved a bunch of money into Galaxy because it was one of those things where it's like, okay, your book value might be $4 or $5 a share. And it's like your crypto business and Helios is at worth.
Well, the other way to think about our book is you can read what our book is.
Yeah.
What our balance sheet, our partner's equity, I think is $3.5 billion, or I'm going to get that wrong by something, so don't quote me. But in that zone.
Yeah.
Our data center, right, is going to start cash flowing soon. And so the way that equity analysts will look at it is some multiple on cash flow.
Yeah.
Which is great. The conservative investor will say, what's that $25 billion of rent worth after financing and discounted cash flow? And not the growth of the business, but the business that's already committed, you can think of as a bond.
Yeah.
It's a high yield bond with the credit rating of CoreWeave. And as CoreWeave's credit rating goes back, the bond's worth more and more.
Yeah.
And to me, that feels bookish.
Yeah,
right? If I had a bond on my balance sheet, you'd call it book.
Yeah.
I have a synthetic bond in that I've got a data center that we own, leased out to a great tenant who has to pay me rent. And I've got a financing cost that he's partly financed, will finance the whole thing, and then the financing cost will come down.
Yeah.
And so so I see our book as much higher in my mind. That's why I sleep so much better. I'm like, even if the stock market goes through a drawdown, like it used to be our stock went all the way to 4, it can't go that low anymore.
For sure. So would you rather talk about like the crypto side or the data center side first, just in terms
Let's
of
start with data center.
Yeah, so on the data center side, I guess, Goldman did a report on you guys. I think they said by like 2028, around like 900 million in EBITDA. I think that's kind of using like the lower end of what you would get on the revenue side. It seems like it's a yield plus or cost plus or yield plus cost structure. Am I saying that right for the rental? So like 900 million. I think like Digital Realty and Equinix, like those guys trade at 20 to 25x. So I think Goldman was using a 27x multiple. So at 900 million times 25 times, it's like 22.5 billion, back out to 7 billion to build it. So that's like $15 billion potentially in 2028, just on that first 800 megawatts, which is like, I think a bit more than the market cap of the stock right now.
Yep.
So then you have another 2.7 gigawatts. And if you kind of like apply that CoreWeave lease to the whole,
well, then we're
to the whole 3.5 gigawatts.
Then I'm King Kong Bundy.
Yeah, that's like $60 billion if you kind of move that forward, which is
so. Let's talk our strategy and how I think things play out. Texas slowed approvals down about 5 months ago because they had so many people say, I want energy, I want energy, I want energy. And they wanted to go through and say who's real and who's not real. We are stone cold serious and we are very real. We are in process with the 3 different regulatory bodies down there to try to get the first piece of that 2.7 approved. That's the fastest way for us to add market cap and excitement to our stock, because we know what to do with that. You quickly go out to the 5 or 6 hyperscalers you have relationships with, starting with CoreWeave, Oracle, Google, Microsoft, you know them. you make a longer-term partnership and then get a lease. You take that lease, you finance it, and you add it to your construction schedule.
Yeah.
So that's mission one.
Yeah.
Mission two is, where else do we want to do this? And can we take this muscle that started looking like your muscles and is ending looking like my muscles, right? You start small and you actually learn and you grow. And so you're hiring people with domain expertise. Your own guys are getting better by the week because they're in combat, right? When you're in the game every day, you just get better at it. And so Austin Storm, a much better employee today than he was 18 months ago.
Yeah.
And so you're developing a team that really can execute. And I think execution is going to be a big part of it. And so we are scouring the market for opportunities. We have people that want to partner with us. And I'm like, dude, as soon as I find the next piece that we want to act on, I said this on the call, and I don't want to confuse people on our earnings call. Right now, I wish I had acted faster 6 months ago, but we wanted to kind of do things in order. Everyone right in this moment thinks, oh, my piece of dirt's so precious.
Yeah.
You know, they don't want to sell it, they're putting dumb prices on it. This thing will cycle just like everything else.
Yeah.
And so we see this as a long-term business, not as a short-term trade. And so we are hunting for other opportunities.
Yeah.
Either acquiring companies or acquiring, but most probably acquiring properties.
Yeah.
Which you then can build data centers on.
So do you guys kind of see, this data center business as a longer term growth business for you guys, like positioning yourself as, so there's these existing data center companies like Digital Realty and Equinix, which trade between $50 and $80 billion. They only have 2-3 gigawatts of power themselves. So, there's a data point. And those data centers are much smaller. I think the average site is 5 to 10 megawatts. Yep. They're not built for AI versus, you guys have 3.5 gigawatts at one campus. You're custom building it for AI. So higher rack density, this liquid cooling, the backup power, all this stuff. So could you see, that data center business becoming maybe you spin it out or you keep it under Galaxy and kind of the Digital Realty of AI data centers?
We are, Chris Ferraro, it's funny, you want to hire employees that wake up at 3 a.m. and their brain is scheming all the time. Yeah. Right? I'm one of those guys. I'd hire myself. But Chris Ferraro is one of those guys as well. And so we call each other in the morning having schemed in our insomnia. We're constantly thinking of how we build this into a powerhouse business. Yeah. And you want to, thinking about how you do it is the first step. A lot of this is execution.
Yeah, for sure.
So it was really important for us to get the first data halls paying us money and make sure we've learned along the way so we didn't fall into a giant pit of lava. But the plan is to build this into a best-in-class, world-class data center business. Does it stay at Galaxy? Right now, it feels like the market's giving us decent value for it. And we will see. We have I would call it a 1 year, got to paddle the canoe through choppy waters in terms of we don't really get a lot of the cash flow, and we need to borrow much more money. Yeah. And so...
But then once you can show you can build it for CoreWeave, I think, how I kind of think about it in kind of the more medium term is once you start cash flowing, even at this phase 1 with CoreWeave, and then, hopefully you get this next 800 megawatts approved, maybe Q1 before the end of the year. That's kind of what management has said historically. Obviously, it's up in the air with everyone applying for power. Then you sign, someone like an Oracle or a Google as a tenant. I think the market is going to start to take you guys a lot more seriously.
You go from being a trade to a business. Yeah. And we're in that transition right now. And I think then the market gives us more value for that. And quite frankly, the company gears up around that. Yeah. Right. And so it would be sheer arrogance to say, we're going to be the best data center business in the world when we haven't built anything. Yeah. Your public persona, your public front, but also your internal confidence grows with success.
Yeah, for sure.
And so this is, and people ask me all the time, well, Mike, your stock went from X to Y. How can it go from Y to Z? Yeah. And I was like, because you've got to bet on the fact that me and Chris and the team around us have been good allocators of capital,
Yeah.
good allocators of our time, have been able to sniff out opportunities and jump on them. We're not perfect by any stretch. We've got a lot of dumb bets in our lives. But on the good bets, we've gone in hard. And you should own our stock if you think we're going to continue to do that.
And like I've been following you guys for a long time and felt that you've done like a very good job navigating crypto, which is crazy. And now, you're going into data centers, and I believe that you guys can execute on like at least like the 3.5 gigawatts you have. And you do the math on that, and that's like $60 billion. Like that's like a 4X on the stock without even the crypto business, without the balance sheet. Obviously you're gonna have to borrow a lot of money, and a lot of stuff's gonna have to come together, but I'm young, I can wait for it to play out. And you guys just added a full gigawatt of pipeline on not this earnings, but the earnings before. And if you can keep on doing that, this could be a massive business. And we've seen like, that company Fermi that launched that they don't have anything live, but they have like aspirations to build something like 15 gigawatts. They're trading at 15 billion. So it's like, I think if you can actually execute on this first 800, get another 800 approved, sign with like Oracle or Google or someone, then the market can start to pull forward. Okay, these guys are legit. They can build out this pipeline. And that is that could be hundreds of dollars a share alone, just on that side of the business.
Your lips to God's ears.
Want to stay ahead of the biggest technological shift in history? Subscribe now to get insights straight from the sharpest minds in tech and finance. Quick legal note, this show is for educational purposes only. Nothing here is financial advice. Investing always carries risk. Never invest more than you can afford to lose. Thanks for tuning in. See you in the next one.